Everyone, welcome back to Fiscal Voyage. My name is Felix. In today's video, we're going to talk about 4 dividend growth stocks that I bought shares of this week. And we're going to start off in my IB Interactive Broker account. So you can see here, I bought some more shares of EVRG. I made a video, I think, a previous week where I bought some shares. Now I have 100 shares total of this company. You can see here I bought about $1,300 worth of shares, 26 shares, and I added shares, and I made another video just on this stock, MGA. I bought 30 shares of this stock at $12,285, and I'm going to talk more about those two. I also bought in my Charles Schwab account, GPN, 14 shares at 1,300, and Sonoco SON 22 shares at $1,267. So overall, 2,500 and another 2,500-ish. So about 5 grand in stocks that I bought because the market had a, was not necessarily down, but a lot of dividend stocks were down during the week, but the market was kind of flat for the week. But a lot of dividend stocks were down because of prolonged interest rate not being cut, so still high interest rates. So the investment world is thinking there not might be any interest cut this year. So that brought down a lot of dividend growth stocks and utility stocks, and dividend companies. A lot of stocks came down during this weekend. So I took advantage of those opportunities and bought more shares. So first we're gonna go with GPN, which I bought here on Schwab, GPN Global Payments Inc. So this stock here is at $94.17, has an earnings yield of almost 12%, 11.6, which is really good. It has a low yield, dividend yield. I'm okay with that because of the growth potential of the dividend and the growth potential of earnings. So you can see here in the fast graph, we removed the price out of fast graph. This company has been very consistent throughout the years, from 2017, 2018, 2019, over 20% of growth. Slowed down during COVID, but then it had 20% growth in 2021 and 2022, and analysts are expecting high double-digit growth going forward. So I like this. This is just the company itself. I like this a lot. And now we'll have the price here. You can see it's very undervalued. With fast graph, anything under the orange line is a good valuation to be buying shares of a company as long as earnings to continue to grow. If it's under the yellow orange line and the earnings are decreasing, then it's just not a good time to be buying. But earnings are expected to increase. It has been increasing for years, and this is why I like this company a lot. And if we go to the technical chart, this is the 3 months closing price. So the 3 month chart is right at the 50 moving average here. So this right here for the 3 month 50 moving average could be a good bounce area for this stock. It could go lower up to $90 or even $80 down here. And I can show you why I think also $80, because on the monthly chart, this is where the 200 moving average is, right at 78.36, around in that $80 range, and there's support right here. So this would be a good support area for this stock at this $80 area. So this is where I expect it to bounce. So right now, since I bought shares around this price, if it were to go down to $80, I will be buying more shares. This will probably be my last lot here, and then I see what happens if it continues to go lower. But I think it could bounce here. You can see here on the RSI on the monthly is under the 50 middle part, so it's oversold, not extremely oversold, but is under the oversold territory, and as well oversold on the 3 month chart. But also the 3 month chart is right at the 50 moving average, which I like as a bounce area for this stock, and it is extended on the weekly. You can see here a lot of red weeks this past few months, so that's why I like it. We had a nice green day on Friday where I bought it, and we also have all the support here at $94, $95. That's why I bought shares of this company. So we're going extended into support. So that's why I bought shares of this company, and now we're going to wait and see. The next stock I bought was Sonoco Products. You can see here earnings is expected to be down a little bit, 3% for 2024, but pick up in 2025 and 2026, 8%, 16%. Right now has an earnings yield of over 9%. I like this earnings yield over 6.5 percent or higher. So this is definitely meets that threshold. It has a nice dividend of 3.63. The only caveat I have with this stock is the dividend growth. The dividend growth is slow here. You can see here kind of in the mid 4 to 5%. You know, it had a 1% in 2020, which is understandable with COVID, but it has a low dividend growth rate. But I do like the yield. But the good thing is the earnings dividend payout ratio is very low at 30%, 38%. So it does have room to grow the dividend nicely, more like double digit. I think they probably start doing that the following year once interest rates start cutting, and then you can see here earnings are expected to be higher in 2025 and 2026. An analyst gives it a pretty good accuracy here. They hit it 75% and beat it 17%. So, you know, over 90% of either hit or higher in earnings, reported earnings. So that's real good. And you can see here, if it were to revert back to a 15 multiple, we're going to get 25% annually rate of return for the next few years. So that's what I like this company, triple B plus credit rating. And I also, with my shares, I also bought. I was able to get 100 shares of this stock. That way, I could be able to sell calls on it. And why I bought shares is because I really liked how this was transitioning here. You can see here on the weekly chart, it had this downturn, and then it was struggling here to get over the weekly 200 moving average, and then it got over it, and then now we came back down to it. So what was resistance now becomes support. So that's how we're kind of seeing this play, is over the 50 moving average. It did break the 200, so I kind of see it as a buy setup right at support area here at around $55. And if we look at the daily chart, you can see here on Friday it had a big red day. This was once a big red bar, and now is a bottoming tail. So that bottoming tail means strong buyers step up around this support area here. So all this junk is support. It was once resistance, it broke out of it, now is support. So I think this gave it a nice buy setup, so it should bring the stock higher. So with this position, I'm gonna wait now and see if it comes down here to $53. This is big green bar here. This is strong support here. If it comes down to this $53, $54 range, I will be buying more shares. Right now I'm just gonna be holding what I currently have and see what happens with Sunoco here. So the next stock I bought was EVRG. This utility company. This stock is undervalued as well. First, we max out the chart. You know, it is a little earnings is a little erratic, but I'm okay with that because it's still utility stock and it still has a consistent growth in earnings. It has an earnings yield of almost 7%, so it meets that 6.5 threshold. Dividend yield of 4.87%, triple B plus credit rating, and it's a safe utility stock. So that's why I bought more shares of this, and I also have 100 shares of this, so that I'm gonna be able, if it extends higher, start selling cover calls to generate more income in this stock. But if we shorten this time period, we can see here normally the stock trades at a multiple of 19, and of course this is because of lower interest rates. Once they start cutting interest rate, I could see this stock going to a multiple, of 17, 16, or even 15. Even if it stays at 15, look at that. We could get 12% annually rate of return. If you could guarantee me 12% every year, sign me up for that. So this is why I like this stock. And while we wait, we have a nice dividend yield of 4.87, and is a growing dividend. If we go to performance, you can see here they average around 6% and 7% for the past few years in dividend growth. So I like that a lot. And on the chart wise, EVRG, if we go to chart wise, we also see here this is also in a transition here on the weekly chart here. If we go to the weekly, you can see here, it broke the support area around $56. It broke it, and then it found support at $47, $48 because of this right here. This is big support area here. And I bought shares here. I just wanted to buy more shares because it came down a little bit here, and because I saw this weekly 50 moving average, the weekly 13 moving average as well is using it as support. So I kind of expect a bounce now because this was resistance here, resistance here. So now we're above this trend. If I draw the trend here, you kind of see it right there. So this trend, it broke it, and now it's going to use that trend as the backside of support, and then hopefully drive the stock higher. If it doesn't and it breaks the trend and gets lower, I will be buying more shares here at the $48 range. So that'll be my next level of purchasing more shares of EVRG. So I like this company a lot. And finally, the last company that I bought was MGA. So we go to this this company specialized in making like car materials, Magna International, and you can see here max this out. So earnings is erratic. They did cut dividend in 2008 2009, which is understandable. How you see how earnings decreased substantially, and even during COVID earnings decreased substantially, but that did drive the stock extremely high, as most stocks during 2020 and 2021 was like super overvalued. But you can see here, analysts are expecting earnings to grow 3% in 2024, and then 20% and 13% for 2025 and 2026. So high earnings growth going forward. And at current price, you can see here, we could get almost 40% in annual return if it were to revert back around this 11-12 multiple, which is very cheap still. And right now with a multiple of only 7.6, that's real, undervalued for a company that's profitable. It has a 13.21% in earnings yield and a high dividend of 4.5%. It has a credit rating of A-, so that's real good, and low long-term debt to capital, which is real good. I like to see this number, under 50%, 60%. You can see here's Automotive Parts and Equipment, a Canadian company. And if we go to performance here and see the dividend growth, you can see here, in 2012, 2013, 2014, I had high dividend growth because earnings was growing substantially. But then, of course, during COVID with higher interest rates, so they're being more conservative. They had a higher payout ratio in 2020, but now the payout ratio is stabilizing around the low 30s. So that's real good. You can see here they had a very low payout ratio, and that's why they were able to increase the dividend over double digit. But I'm very happy if it were to just increase it 5 to 10% going forward, and because it's paying out a very nice high dividend of 4.50. If we go to the stock chart for Magna, you can see here on the weekly chart it's down substantially. I bought shares I think around this time, around $46, so I am down about 10%, but it did kept dropping, which is okay. This is what we do. We can never time the bottom, but what I like is, if you can see here on the daily, this right here is buyers. This is buyers. So this is the day I bought shares. It gapped down, buyers stepped up. This was one big red bar, and then buyers stepped up here, and I like this a lot, right at the $41.50 area, and now is at $42.19. You can see a nice bottoming tail here on the daily, and on the monthly, another reason why I bought is right at the moving 200 moving average right here around $41.81. So I expected a bounce here. You can see how it bounced here, and it used it here as a resistance here. So I expected to bounce on the monthly 200 moving average. So that's why I bought shares. The next place I will buy more shares if it to come back down to around $30 or $35 to $30, I'll buy more shares. Right now I'm just gonna wait and see. On the weekly chart here, you can see how it's just been down for past since April. It's just been going down, going down. So now we have some buyers, so I expect this to kind of transition now to higher. And why I expect it to transition higher is because earnings are growing, expected to grow this year, and expected to grow 20% the following year. And you can see here analysts expecting about 13.5% earning growth for the next 3 years, 12 long-term 12.42% earnings growth. And then an analyst scorecard, it's pretty erratic, but more or less they get more than 50% either hit or beat. On the 2-year forecast, it gets a little better ratio, but that's why I like this stock, and I bought shares of this. So thank you guys for watching. If you bought any shares of companies during the week, let me know in the comments. And thank you for watching. If you're new to the channel, make sure you hit that subscribe button and like this video if you liked it. Thank you, and have a good one.